China's economy is collapsing. Its growth is slowing and its effects are rippling throughout its many cities. Customer deposits at many village banks have just vanished. The bank began by suspending the accounts of many Chinese citizens under the pretense of a maintenance update. However, when people went personally to the bank or random ATM to access their funds, the bank wouldn't let them. Over $6 billion worth of deposits cannot be accessed by their owners in Henan province of China. As a result, the people who lost their money to the bank protested. Thousands of police were sent to quell the unrest. China tried to appease protesters by offering to pay them back their money through the government's bank insurance. The Chinese government is responsible for providing insurance for bank deposits for up to $500,000 yuan. So problem solved, right? Well, no. Apparently, the protesters couldn't get their money back from the bank because of a legal fine print. The government insurance did not cover depositors who were exposed to fraud. The Henan banks were actually scammed by a third party called the Henan New Fortune Group. This company took the money from the people and ran away. Since this was an alleged fraudulent transaction, the Chinese government refused to give depositors their money back through government insurance. Since the Evergrande crisis, more and more real estate companies have followed suit and defaulted on their original loan obligations. Over 30 large real estate companies in China have defaulted and owe over $1 trillion of debt. Many overseas investors are hesitant to buy bonds issued by the Chinese real estate developers since their ability to consistently send bondholders their bond payments are questionable. Many bonds issued by Chinese property developers have been given the junk bond status, indicating the possibility of the repayment of the bond at its maturity date is almost non-existent. Most property developers in China operate under a controversial business model. Real estate companies would first collect payment for the houses upfront through a pre-sale before the houses are even built. Then they promise to build the houses within 3 years after receiving the money. This is possible because the government allows real estate developers to start accepting money through pre-sales if the builders manage to build 25% of the house. After that, Chinese buyers could put down roughly 30% of down payment and make deals to pay back the rest through mortgage loans from their local banks. Now, the government does regulate the down payment for these homes and mandates that the money should be placed in escrow accounts that are monitored closely by banks. However, the regulations are quite loose, so property developers often take out the money from these escrow accounts before they even reach project milestones or finish their building projects. The real problem is these property developers then use the money to invest in new projects, buy land, and build partially finished homes so they can then sell more homes through their pre-sales. By doing this, they can effectively game the system and get rich through continuous pre-sales before any homes are even finished. In the end, only a small portion of the home buyers' money goes into the actual construction of their home. This method of funding housing development through pre-sales makes up 80% of China's new home sales. The practice is commonplace. That's not the only problem. Pre-sales were not enough for property developers who had also used loans from banks to fund their housing developments. As a result, they accumulated a lot of debt throughout the years, which they usually paid off using even more loans, either through banks or by issuing bonds to overseas investors. China had tried to fix this problem years ago by introducing the Three Red Lines law. It was designed to stop property developers from taking too much debt. Real estate developers had to prove their finances were stable by meeting the conditions stated in the Three Red Lines. If they failed to meet the Three Red Lines, then these companies were not allowed to borrow money from banks. The thing is, China's attempt to rein in its rabid property developers' unsustainable practices came too late. Many real estate companies had relied on this model of getting loans and money from pre-sales to fund their building operations for years. So when the Three Red Lines was introduced, many property developers failed to meet the Three Red Lines right away. So their method of funding, their ability to borrow money, was taken from them. They tried to get their finances in order, but they did not have enough time since the loan repayment clocks were ticking and they had to dole out their bond payments on time. Without the loans, real estate developers were unable to finish their homes on time, which led to protests and a mortgage revolt. Chinese netizens made a list of over 300 property projects that they had threatened to boycott if the developers didn't continue building homes. Millions of apartments that buyers had already paid for in their pre-sale are still unfinished, so millions of home buyers were threatening not to pay their monthly mortgage payments. If the situation isn't fixed soon, home buyers will refuse to pay an estimated $370 billion worth of home loans. The mortgage crisis of China has worsened, forcing many companies to suspend their projects, leaving many buildings unfinished. This had the added effect of agitating customers who had bought those houses through the pre-sale. Buyers of those unfinished projects banded together and stopped paying their mortgage payments to banks as a form of protest. Home buyers and protesters were demanding that their house be finished as soon as possible. Unfortunately, real estate companies companies were not in a position to comply since they didn't have enough money. The mortgage protests went out of control and home buyers across the company withheld mortgage payments, causing major stress to China's banking system. This forced China's hand. They censored and removed posts on China's social media platforms that protesters were using to coordinate their mortgage revolt. China's banks cut mortgage rates for the first time in forever for first-time home buyers in an attempt to promote home buying, while cities across China's many provinces have reduced down payment requirements and restrictions for home buyers. China's government is breaking its own rules by telling banks to keep providing money to cash-strapped property developers as long as they can fulfill their promises to angry home buyers by building the promised homes. Subsidies for home buyers are now on the table. China's government are providing billion-dollar relief funds to property developers in order to resolve the situation. The Chinese government has also encouraged its party members to buy more houses in an attempt to prop up the housing sector. Unfortunately, the mortgage revolt had made many Chinese citizens lose confidence in the property market. There were already so many homes that property developers couldn't build on time. So why would anyone try to buy homes from these dishonest property developers? What if their homes aren't built on time? Home sales fell, reducing the developers' ability to raise money to fund their operations. Demand for China's housing has dropped to 16%, a level never before seen since 2016, while sales of apartments in China are in their 13-month lows. China's attempts to restore home buyer confidence have failed, and Chinese banks are hiding their non-performing mortgage loans, while government land sales to property developers have dropped, drying up the coffers of local government. China's local government depends heavily on selling land to property developers to get the funding they need to continue operations. So losing this major source of revenue is worrying. Real estate makes up roughly 30% of China's GDP, so its slowdown has devastating effects on the economy, and it's showing. Tencent, one of the largest companies in China, saw their revenue fall for the first time in years. This is particularly important because Tencent owns one of China's largest payment systems, Weixin, or as it's known in the Western world, the WeChat app. This is the app that most Chinese citizens use to pay for goods and services. Tencent has tightened its belt and laid off over 5% of employees to save on costs. This paints a worrying image of China's current economic status. One of the things that made China's economic problems worse was the way it handled the pandemic. Even now, after the pandemic is somewhat over, China is still enforcing strict COVID policies. Factories were not allowed to operate normally, shuttering production and slowing economic growth. In Shanghai, there was a large lockdown which was so strict that people started protesting. If one person tested positive for COVID, the entire building was forced to isolate itself from the rest of the city. The lockdowns in Shanghai were a response to the Omicron variant of the pandemic virus. The Chinese authorities usually have sweeping powers they can use to manage their citizens, so they chose the easiest and the most unreasonable approach to handle the situation: forced isolations. Once someone is tested positive, not only is he sent to an isolation facility, even his neighbors next door are sent to the same facility even though they didn't test positive. People who aren't sent into isolation facilities are not living a happy life either. Millions were forced to stay indoors and were only allowed to leave their apartment to do COVID tests. So many were starving since they were not allowed to go out to get food. Chinese authorities tried to help the situation by delivering food to people who were forced to isolate, but the food they sent just wasn't enough. Severe pandemic measures are still in place today. The people of China hate the government's harsh COVID policies. To understand just how strict China's lockdown policies actually are, look at this video. This isn't a train station. It's Tencent's company building. This video shows hundreds of people running away from Tencent, one of China's largest companies, after one employee in the company tested positive for COVID. Just one employee with COVID was enough for China's government to impose a full building lockdown of a company that had thousands of people working for it. The building was massive, so testing for COVID would take a long time. The results would take even longer. Anyone who's positive would have been shipped off to isolation camps until further notice. Tencent employees are running away. They are panic running because they don't want to be locked in a building for the next few days. One person with COVID justified locking down an entire building full of people who may or may not have COVID. China's authoritarian approach to the pandemic has rattled the Chinese people and has stopped them from working, and in doing so, throttled China's production capacity. Factories had to be shut down and transportation links were crippled. China is the world's factory, so if it is suffering, supply chains across the world will be broken. Companies across the globe experienced delivery and production problems. iPhones couldn't be built fast enough. Cars, equipment, and other goods couldn't be manufactured at the rate people expected prior to the pandemic. Tesla's own Gigafactory was not allowed to operate because of the shutdowns imposed by the Chinese government. A horrible development since Elon's factories are known to be massive money burners. Apple itself lost $8 billion in sales because of their supply chain problems in China. No one was spared from China's slowdown. Every country had exposure to China, the world's second largest economy. So China has to get its act together to allow more of its factories to operate. China's GDP growth for 2022 grew by 3.3%, the slowest seen in the past 40 years, below the already reduced government target of 5.5%. There's also the problem with employment. Over 20% of China's youth is currently unemployed. China's population is also aging gradually and is expected to halve by the year 2100. So its future productivity is also suspect. If China's economy goes down, the entire world is affected. Many are waking up to the dangers of placing all their eggs in one basket. The cheap labor promised by China's working class doesn't look so appealing anymore when companies have to deal with China's bureaucracy. Many companies are shifting their production away from China to nearby countries like Vietnam in an attempt to diversify their supply chains. There's no easy way out for China, so after many years of doomsday propaganda from the US, China might finally collapse on its own weight. Hopefully, China can find a way out of its self-imposed situation. Like and subscribe.